Hi everyone, hope you guys are all having a great day today, and in today's video I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now I do post these videos daily, so I highly encourage you to double check my latest video on my channel so that way you get the most up-to-date information, and consider following and subscribing so you'll be notified when I do upload my next video. Now before I get to the analysis portion, I'm going to go over the economic calendar, and for Monday, September 9th, 2024, we have at 10 a.m. wholesale inventories. At 3 p.m. we have consumer credit. Now one thing to note for the week to follow is on Wednesday we have CPI inflation numbers coming out, and on Thursday we have PPI inflation numbers, and then the week after that, mind you, we have the Fed FOMC interest rate decision. Now it's expected that the Fed will cut interest rates, most likely 25 basis points, and then there is a possibility for 50 basis points. And then at 2:30 p.m. we have Fed Chair Jerome Powell press conference right after that 2 p.m. Interest rate decision. So be mindful of that for the week that's coming up and the week that follows after that. Now the markets did go to the downside, and like I indicated in the last video, indications are to the downside based off, for example, MAC lines, expectations of markets, employment numbers, so on and so forth. And that is still the case right now. So we're going to be looking at SPY ETF for S&P 500, QQQ ETF for Nasdaq. They're just the same thing, just different ratio, and then Dow Jones as well. But I want to show for the S&P and Dow Jones first, hypothetically, in terms of the relations, I would say, is because the S&P and the Dow Jones have touched the all-time highs recently, and then Nasdaq almost somewhat did, but it kind of not retested it again when S&P and Dow Jones did at the same time. So here's the all-time highs for the whole entire chart, and if we get in closer, you can see that previously in July of 2024 we were at the all-time highs, and then as of August of 2024, multiple times tested to pass that zone in essence, even though there was a couple of false breakouts, so on and so forth. These were pre-markets, after hours time frames and all that stuff, and ever since we tested again, pretty much started heading down. And then the same thing for the Dow Jones. If you look at the all chart, all-time highs, so on and so forth. And then if we go to closer time frame, here was the previous all-time high, then we had another spike up to it, couldn't pass it, and then we did have nice false breakouts, potentially reversal to the upside based off MAC lines, but unfortunately just got pulled down at pretty much the same time as S&P. And the one thing to note is for the S&P, Nasdaq, and Dow Jones, based off the MAC lines, in case you're new to the channel, MAC lines indicate if we're in a bearish or bullish movement. So I'm going to zoom in right here a little bit, and you can see there's the MAC line right here. And this is in the bearish movement, indicating potential further downside. But this is the direction currently. Now, if I go to the one-year chart, again, I'm looking at ETF SPY, ETF for the S&P 500. The one-year chart is indicating that we're still in bearish movement, heading further down, and we're getting close to a moving average. So just because we're heading down, for example, the one-year chart and so on and so forth, doesn't mean that there will be dead cat bounce days, but in essence, it looks like we're going to be seeing more down days, in my opinion. Like always, it's just my opinion, so please do your own due diligence and research before buying, selling. But if we look at the one-year chart, downward trend resistance line, or not downward trend, but bearish momentum. And then the 5-year chart, same thing. And as of, I think, a couple trading days ago, the 5-year chart, this became a little bit more solidified with the more solid red versus the light reds, and potentially more downside. The reason why I'm expecting more downside too is not just the MAC lines. It's more of a combination of a bunch of things. MAC lines, plus we hit the all-time highs, could not necessarily pass that zone, plus the Fed cutting interest rates, which technically is a good thing because if rates come down, companies tend to borrow more, because if hypothetically rates were 1%, they're not going to be 1%, but I'm just saying in terms of if rates were at 1%, close to zero, then the lower they are, the more of a chance a company will borrow money to invest into a company in terms of development, research development, so on and so forth, because they expect more better returns versus the borrowing interest rate. So if interest rate is 1% and they're expecting returns on their investment in terms of for the company of 5%, let's just say, then it's worth it. Obviously, they're expecting more. But the benefit for this, for the economy, for the rates being cut, is that if companies tend to borrow more for research and development, so on and so forth, it grows the economy because they're hiring more people, et cetera, right? But in the past, multiple times we've seen when Fed starts to cut interest rates, and the reason why they're cutting interest rates is usually to better the economy, right? Like I stated with the investments and all stuff. So it is beneficial hypothetically. The only problem is in the past, when they tend to cut interest rates, then the markets tend to have some kind of correction, pretty much sometimes shortly after, sometimes a year later, or within 6 months, et cetera, et cetera. So it's the time frame adjusts, but we tend to see corrections. That's the only thing. So with the MAC lines plus the all-time high zone being tested and not necessarily being passing, then in my opinion, there's more down days to come. Again, there will be bounce days like dead cat bounce and all stuff, but still heading down. But either way, so 1 year chart, like I stated, MAC line, bearish movement. 5 year chart, same thing, bearish movement. All chart is the only one that's different, that it's potentially crossing down. Now, again, we could still head up and the direction could be reversed. This doesn't mean that it's guaranteed to come down, but just to show you this upward trend resistance line dating back since 2010. And every time we hit it, we kind of got knocked down. It's probably better to show in the 5 year chart. But yeah, went knocked down, so on and so forth. Market was still going up, mind you. Doesn't mean that's not going up. And then this was support levels and support levels as well for 2 major crashes. Now we are in the mid zone for the S&P. For the Nasdaq, we are in the higher zone. And for the Dow Jones, there's no real channel for the most part. There is a channel. I'm going to show it, but it's not as obvious as the S&P and Nasdaq. So technically, being in the mid zone, we've seen multiple times we've been in the mid zone and then came back down, right? So we don't necessarily have to go to this upper level before we come down to this, back down to this lower level. So we do have room to go to the downside. But I would say in terms of, there's a lot of catalysts that could bring us up to the upside, right? For example, the new election, the election coming up, that could be a catalyst depending on parties who win, so on and so forth. Just a lot of factors that could come in. And in terms of mega cap stocks too, for example, if NVIDIA for the next earnings comes up, because I'm trying to explain that it doesn't necessarily have to come down to this zone. So if anything comes into a major catalyst like a mega cap stock like NVIDIA or Tesla starts climbing up incredibly high for the most part, then it could pull the markets up and then reverse the MAC line directions, right? So just want to be clear about that. Now for Nasdaq, I'm going to be looking at ETF QQQ. Actually, one thing to note for the SPY, the S&P 500, at the same time, we have a lot of more drops to come, and we have support levels. And some of these support levels we're at right now, arguably we're already at a support level right now. And that's why I'm saying there's dead cat bounces that could happen. But some of them are not that strong, right? Arguably this one only has, well, not only, but this has 3 touch points. And we're technically 4 now, potentially. But it's, in my opinion, not that strong. But again, it could provide a dead cat bounce where Monday we do bounce up. But ultimately, in my opinion, we are still heading down for the time being as an overall movement, if that makes sense. Now for QQQ, again, ETF for Nasdaq. Let me just show the 1 year, 5 year. So here's the 1 year, same thing, a downward trend or a bearish movement with the MAC line. The 5 year chart, same thing, more solidified, just like the S&P, and then the all as well, just like the S&P. Arching down to the bearish movement potentially. You could still argue in bullish movement still, potential more to the upside and reversal. So it's not solidified in the bearish movement, but this is more prevalent to the bearish movement, or crossing over, I should say, versus the S&P, right? And then just like the S&P, let me go to the 5 year chart. It has an upward trend resistance line dating back since 2010 as well. Every time it went up, mind you, it was still going up. The market was still going up. Doesn't mean it's not. It's just every time it went up, got knocked down, except for the 2020 to 2022 breakdown or breakthrough. And then it came back underneath, and then we tested it again, could not pass it as of March, give or take, of 2024. Then we did pass it in July, so I'm going to zoom in closer. This was the July timeframe. I know there's a lot of lines, I apologize, but this is the line that goes across. Hopefully you can see it right about here. This is the line. And we did break through it in sometime of June and July of 2024, came back underneath it, and we could see we tried to pass it once again once we were underneath it, when we came down underneath it, and we could not pass it, and then we started heading down just like the Dow Jones. And again, overall, there is potential more to the downside. Let me just go to the 5 year chart to visually show. So we do have lots of room to come down for the Nasdaq. Now, Nasdaq is more of the tech sector, so we do have major major volatility of types of days versus the S&P. Like for example, you can see it was almost down 3% today versus or more exactly 2.68%, negative 2.86% drop today for Nasdaq versus S&P 1.68% drop for the day, right? So it's more volatile versus the S&P. Now, again, there's lots more room to grow, to drop down. And then same thing with the Nasdaq. I would say we're technically at a level to potentially bounce, because you can see consolidation resistance and a little bit of support across when I measured it, and we could potentially bounce. So Monday could, but in my opinion, I would say it's more at least to drop. For example, we closed at $448.69. I would say that we could potentially find stability at this zone right about here, where we drop down and then we could see multiple times drop down to support, go up to resistance, come back down to support, resistance somewhat in a way, give or take. And that is pretty much about $433 and some change, give or take. Obviously, it's not going to be exact, but somewhere around there in terms of ballpark. Again, overall trajectory, regardless of dead cat bounce days or stability, is for the time being is still more to the downside overall. Because again, like I stated, with the all-time highs, the upper limit zones, so on and so forth. Now for the Dow Jones, same thing. If we go to the 1-year chart, we have the bearish movement as well. 5-year chart, crossing over, more prevalent. Now, if you remember yesterday, it wasn't as prevalent to the downside. Now it's became a little bit more solidified to the downside. Still bullish movement hypothetically in the terms of 5-year chart, but there's more of a chance crossing over to the bearish movement. And then the all chart, this one is a little bit more stronger versus the S&P and Nasdaq in terms of still being in the bullish movement. But mind you, for the Dow Jones, is only mainly for it's for 30 companies, right? It's not as much as, for example, the S&P where it's 500 companies. And then if we zoom in closer, again, we're at all-time highs, like I mentioned, or did, and then came down, and we do have more room to drop and more stability of zone, like more of a stability zone, in my opinion, if we were to expect some kind of stability, would be this upward trend support level. Doesn't mean we're going to get to it versus, for example, it doesn't mean that we're going to drop to it sooner first and then bounce up to the upside to create new all-time highs. It's just if indications are further downside for the market, then I would expect this zone to be at least tested to potentially have a bounce off there or a support consolidation, so on and so forth. And this zone, this dates back since April of 2024, multiple touch point bounces. So it is truly a bounce zone in my opinion. And if we did drop to it recently, mind you, we closed at 40,345 points. Then not recently, if we dropped to it, like for example by Monday, then you could expect support around, give or take, ballpark 38,770 points, give or take. But the longer we take, the higher the low will be, if that makes sense. But yeah, so that's basically it for today's video. I do appreciate the support. If you found it beneficial, consider dropping a like. It does help with the channel, so thank you so much for that. I do appreciate it. And again, I do post these videos daily, so I highly encourage you to follow and subscribe so you'll be notified when I do upload my next video. And that's it. Thanks again for watching. Take care. God bless and peace.